This week we're going to try something different and use video recordings to help explain what the charts are showing us. Here we have the SPY, which is the S&P 500 ETF. A few weeks ago, we had a low put in here, this yellow line. Since then, the price has gone up, but this past week we've had some sell-off due to market news and changes in tariffs and possibly an inflation number. The stock was trying to get out of the danger zone, which we set here, the last low. So the price felt some resistance there and it quickly fell. This means the market is not quite ready to go into a bull phase, meaning upward momentum. If we add the volume, we see the volume did go up a little, this red bar here. It's not very high volume like the days over here where the sell-off started. That was much higher volume. For those of you that are holding long term and have bought before the beginning of the year, probably still worth holding on. Really depends on your risk tolerance. If you're looking to buy right now, the danger zone is probably not the best time to buy. What you want to see is the price get above into the warning zone, and we want to see certain things. We want the price to get above this 50-day moving average. We want to see the price get above the 200-day and stay above. You saw it did go up above it for a couple days and then it fell off. That's why it's important to know what your metrics are or what your indicators are and make sure that they're successful. Just because the price gets above the 50-day or the 200-day doesn't mean it'll stay above. Part of the PIM trading system, we use parabolic SAR to help show us resistance and support. So these yellow dots are the parabolic SAR. When the price is above the parabolic SAR dot, these dots, that means that's the support. We don't want to see the price fall below it. On Friday, we saw this big drop and it fell below the dot. Now the dot is above the price, meaning in order for the price to show strength, it needs to get above the dot. Look here, when the market sell-off started, the price fell below the parabolic SAR dot and the dot stayed above for weeks. And then here it's where it went above and it did show strength for about a week, but now it's back to weakness. So if you're looking to buy, and you want to consider the PIM trading system, the parabolic SAR dot, the price getting above it, is one way to find an entry point. Like we mentioned, the 50-day and the 200-day are other entry points. Down here, the PIM trading system shows how we use our indicators and provide a score. Right now, it's at -1, meaning the price is below the 200-day. And for the system, it's a no-go. Anything red or below is a no-go. Yellow is considered potentially an entry point or potentially an exit, meaning this is the warning zone for the PIM score. And green above means you have the highest chance for success. Doesn't mean it will succeed, it's just you have a higher likelihood. Now let's look at the QQQ, which is the NASDAQ. The similar behavior as the S&P 500. It found support a few weeks ago and so far it's holding above it. This one was not as strong as S&P. It never got into the warning zone. It's been in the danger zone the entire time. So it was pretty risky to buy in the danger zone. As you saw, it showed like it had some potential, but then it quickly fell and the price didn't get anywhere close to the 50-day. The 200, it found resistance at the 200. It couldn't even get above it. Parabolic SAR, it showed that it found support. The dots were at the bottom. Again, like the S&P 500, it fell below, and now the dot is right here above the price. We're going to want to see the price get above the parabolic SAR dot, above the 200-day, and stay above. And for full strength, get above the 50-day and stay above it. This is the DIA. This is the Dow Jones ETF. Very similar. We're all seeing very similar patterns. The Dow Jones was the strongest of them. The three main indices. It did get into the warning zone and it stayed above for a while. It fell slightly below. It's still holding support. This one's probably the strongest one to consider getting into because it's more defensive. It's not growth stock. It has other stock that's not in growth. When the market is worried about, when it's volatile, growth tends to get hit the hardest, and the Dow Jones doesn't have concentration in that. It doesn't get hit as hard. So right now this is the more defensive one to play. We're gonna look at the 50-day. It got closer to the 50-day compared to the other ones. The 200-day, it stayed above for a few days. So you saw when it got up here, this was a sign of good strength, but the red days to follow was kind of a warning sign not to get in. What we want to see is more green days that stayed above. You don't buy on the first green day up. You wait to see that it proves itself. 3 to 5 days is a good range to wait. So on the second and third and fourth day, it fell down, and it started off right at the 50-day and fell further down. In all these charts, you want to see the PIM score kind of sloping upwards. Since the sell-off, you see the PIM scores kind of trending down. We want to see it start to trend back up. Gold has been very strong. It's been in the chase zone for a while. So the buy zone is the optimal price to buy. That's where you get the potential for the most gains. The chase zone is 5% above the buy zone. So if you missed it and you still wanted to get in, you could buy in the chase zone, but you have a higher likelihood that it could fail because sometimes the price does break out above the buy zone, gets into new high, and then it falls back down, which we saw in the indices earlier. But it's showing a lot of strength and it's still in the chase zone. It's worth considering depending on your risk tolerance or your long-term outlook. This PIM score has been very strong. It stayed in the green. It had a couple days where it dipped below into the warning zone. Overall, this is still a good investment. Now, if you miss gold, you might have a chance here in silver. It's not as strong, but it is in the buy zone. The PIM score has been very strong, just mostly in the green in the past couple months, a few days here and there in the warning zone. This one's definitely worth considering. So Berkshire Hathaway, it's a stock, but the way it was kind of designed to be is to kind of help provide growth strength because they are very well diversified. About a month ago, we showed that it fell, but if it had the potential to bounce off the chase zone bottom or the top of the buy zone, that it would be buyable, and it did. And you saw it quickly went out of the chase zone, and now it's in the hold zone. So right now, this is not a buy for active traders, and for long-term traders, it's depending on your risk tolerance and long-term outlook. And that's it for today's video. Thanks.